How's it going, traders? Papa Wall Street back with another market sector review. Today we're going to look at some of the top sectors in the market and see, what is showing relative strength so we can watch those sectors for this week. Make sure you hit the like and subscribe button down below so you can get these actionable ideas as soon as they come out. And if you can, leave me a comment. Let me know what you think about these chart videos. Also, if you feel like I'm talking too slow, you can watch these videos at 1.5 speed. And keep in mind, this is not financial advice. I'm not a financial advisor. I'm only doing this for educational purposes only. So let's dig into the charts. So first up, we got the Dow Jones Industrial Average, DIA. Like much of the market, it's rebounded nicely last week. We are using TrendSpider and we are on the daily chart. And you can see we blasted through the center channel here of our down channel. So you can see here it acted as support, resistance. We broke through that, ultimately failed at the center channel here. And now we are 5 days green after being 7 weeks red, and we're breaking through that center channel. So a couple of things we want to watch for. We just broke out 50 on RSI, so I think that's a good initial sign, but we have a lot of supply up above. We got the 50 simple moving average, we've got the 200 simple moving average, and then we have all of this supply, right? All of this supply is basically anybody who bought up here. They're in the red right now. And so the question becomes, as we start to tick higher, we're going to get resistance, potential resistance here at the 50. You could see how it acted as resistance there. If we get up to the 200, that's also going to act as resistance. In fact, it's probably going to act as a bit harder resistance because we also have our point of control from this prior swing high. The other thing we can look at, and I'll draw this out for you here, is our retracement levels, our Fibonacci retracement levels. And so, now that we're taking a look at that, not only is our point of control here, not only is the top of the channel here, not only do we have the 200 simple moving average here, we also have our 618 retrace from that swing high to that swing low. So this is going to be the area that I'm going to watch really, really closely, and I suspect it'll probably be similar on SPY and the Qs. But this would be the area I would be very careful as we get into that rally. Maybe we have a couple of day pullback and then we continue higher, maybe over the next 2 weeks. But this would be the area I would watch for resistance and watch for that bear market rally to end. So not a fortune teller. I don't know that's what's going to happen, but looking at this chart objectively, that's what I would be watching for. All right, taking a look at SPY. So let's dissect this chart. Again, we're anchoring our volume by price to our prior swing high. That's right here. That for us is going to be our all-time high. That gives us our volume profile over here. Helps us identify supply and demand zones. So you can see here, I had us in an ABC correction, and in our C wave, wave 1, 2, 3, 4, and potentially wave 5 ending here at 378. Right at our COVID low. We were all watching it. For those of us who've used anchored VWAP, no surprises. This is where we bounced. You could see RSI seeing resistance here at 50, finally breaking out here over these last 5 days. And we came right up to 415. If you watch me on Twitter Spaces with Wolf Financial, I was talking about 405. I said if we can break 405, we should see 415. We stopped right at 405 on Thursday, and we stopped right at 415 on Friday. I don't make these levels up. These are just technical levels. So what do we have to contend with here? Very similar to the Dow Jones Industrial Average, we've got a declining 50 simple moving average, a flattening 200 simple moving average, and all of this supply up above from everybody who bought over here. And so as we come into these levels, expect to see a little resistance, right? Market doesn't go up or down in one straight shot. We don't usually see V-shaped recoveries or V-shaped declines. So just keep that in mind. We might see another, couple of days ticking higher and then maybe a few days of consolidation or back testing. If we do break 415, watch for a back test of 415. If we see resistance early this week at 415, watch for a back test of 405. We play these levels all day, every day. It's so important to know them. But regardless, we've got to get through the 50 simple moving average and certainly have to get back over that 200 simple moving average. So that's what I'm going to be watching for on SPY this coming week or two. And very similar to the SPY are the Qs. For some reason, my December low anchored VWAP likes to turn off from time to time. So we're just going to pop that right back on right there. And you'll see why that's important, because the Qs have been weaker in this decline. And so we lost that COVID anchored VWAP, let's see, right back here in late April, early May. And so what do we look for then as our next major low anchored VWAP? That was the December 2018 low. And I had that potentially as our wave 5 bottom. You could see I had our initial target zone to the downside here. We hit that. And then we had our next target zone to the downside here. And we perfectly bounced off that. This being the 1272 extension to the downside off of our B wave. And then this being the 1618 extension to the downside off of our B wave. These technical levels work so well. Really important. Learn your Fibonacci, learn your Elliott wave. It will help you and give you an edge in this market. So you can see we're breaking out a little bit on 50 RSI here. 3 days green. We're through 303. I thought 309 is maybe the next major. 309 to 310 is the next major level I was keeping an eye on. That's pretty much where we stopped here. I think we cracked 309 this week. I think we could see upwards of 315 to 318. This is going to be the big level. And why is it the big level? Because you could see it acted as prior support on these two back tests here, and they got really choppy here, eventually losing it. So what I would expect, we'll come into that level. We might consolidate for a little bit in between these levels, and then either we fail and we head back down, or we break out and we start to test the 50 simple moving average. And then once we test the 50 simple moving average, look at all of the supply over here. Going to sound like a broken record, but this supply is everybody that bought up here, right here, and is bag holding, right? Because they're red. Anybody that bought up there, down here, they're red. And so when they come up from a psychological standpoint, they may want to cut their trade and break even. And so they're going to sell into you as you get up to here. So once we get over that 50 simple moving average, yeah, maybe we can hit the 200. You got all this supply to contend with. The point of control is right here around 344. So just be careful as we approach these levels. Next up is IWM, certainly much weaker than the Dow Jones, SPY, and the Qs. But we saw, again, another 3-day rally, right back into that COVID low anchored VWAP. We've got a declining 50 simple moving average. That's what I would watch for a move back higher. We need to get back over this level. Then possibly we've got a shot at 200 and then the 200 simple moving average here. So that's what I would be watching for on IWM. Let's take a look at the dollar index. So as the market goes up, so does the dollar index decline. If you see the dollar index going up, it's very good possibility that the market is going down. They work inverse of each other. So I always like to kind of keep this dollar index chart up just so I can understand what it's doing relative to the rest of the market. So just a little tip there. All right, so let's take a look at some sectors. We're going to take a look first at SMH. This is the Semi-Conductor ETF. I'm going to anchor my volume profile to the prior highs. You could see these are the holdings, top holdings for SMH. TSM, NVIDIA, Qualcomm, AMD, Avago, and MU. If you are a member of my university, I talked about a few of these names. I am liking SMH for these next couple of weeks if the market rally continues. If you're not a member, please check the links down below to join me up. It's not that expensive, and you get a ton of value from my memberships. And what I'm watching here is that nice close over the 50 simple moving average. So you've got a lot of supply here, but the supply is right at that 200, and you got a supply gap or a volume gap right here. So that's what's getting me really interested with semiconductors this coming week or two. So I think if we can get another daily close over that 50 simple moving average, I think we can make a quick move to the 200 simple moving average here. We also have a TTM squeeze that just fired on Friday, and we broke out on RSI here over 50. So keep a close eye on semiconductors this week. We talked about TAN last week. This is the Solar ETF. We did talk about it last week. Did like the chart setup. We are coming up to these kind of like a descending triangle. We got a 2-day close over the 50 simple moving average. So let me anchor this properly so we understand where our supply is. So I think once this is over the 200 simple moving average, this thing can really scream higher. You can see I'll drop my fib levels here. I think we have a shot at 83, 85 if we can break 73 and then 78. 78 probably being the more key level because it's above our supply. It's above the 200 simple moving average, and it would be above the 50% retrace. And you can see from back here that this area here acted as resistance. And so you broke out that one day and then bearish engulfing candle right on that 50% retrace, right at the 200 simple moving average, right at the downtrend line. So 3 points of resistance on confluent or confluent resistance, ABC retracement right back down. Do we get a potential double low here? Well, if we could break over, $80, then that would be a confirmed double low, and then potentially we can see a move back up to 101 on TAN. Here we go. The top holdings: ENPH, SEDG, RUN, and FSLR. Here's energy. No surprises here. This is one of the best performing sectors this year, if not the best. ExxonMobil, Chevron, ConocoPhillips, we've taken trades on all of them. Currently have CVX. We have a trade idea that went out last week. We're in that. It's still green. Again, that is going to be updated to my Pup University members. Link is down below. But you can see XLE is moving really nicely here. I believe this is marked up on the session chart. There it is. Beautiful cup and handle breakout. Beautiful move. Nice back test of the 50 simple moving average. We just pushed through the 3618 extension at 87.97. Next target to the upside is going to be 95.29. RSI is breaking out. Looks beautiful. I did talk about utilities last week. For those of you who've watched last week's market overview video, I did mention watch utilities. Look at this beautiful move that we had on Friday. Big bullish engulfing candle right through that 618 retrace at 74.33. I do feel 77.16 should come this week. We have a 2-dot squeeze fired. You can look at some of the top holdings: NEE, DUK, SO, Dominion, and so forth. Keep a close eye on utilities over the next couple of weeks. Here's a sector that got a really big clue in on Monday. Talked about this with the university members. We saw some bullish put writing. Bullish put writing. Slip up over words here. Bullish put writing in the 3x leveraged financial ETF. And that got me right into Goldman Sachs. And so Goldman Sachs was my big trade of the week last week. And I still feel like there's a little bit more room for financials to go. Our 618 retrace here is at 36.02. We're currently at 35.60. We broke 50 on RSI. I would say that's probably where we may start to falter. You could see where the 50 simple moving average is coming down. It's going to hit us right where the 618 is. You can see that acted as resistance here. It did break down here, and we've been chopping around this 50 simple moving average for a while. Did get that death cross, that bearish cross here, 50 going under the 200. But if we can break over that 50 simple moving average, then I think that opens us up right to the 618, which is right at the 200 simple moving average, which is also right at the point of control with volume. This would be the area I would be targeting on XLF. Final sector, not last but certainly not least, is the XOP ETF. This is oil and gas exploration and production. Think of CPE, SM, OXY, FNG, AR. We've been talking about a lot of these names. We've been putting out trade ideas on a lot of these names. We are finally coming into these 2018 highs. We could jump up to the weekly chart real quick, and you could see all the chop here in these 2018 highs. I've been saying for a number of months now, this is exactly where we're headed. We're finally here. So now is definitely the time to keep a close eye on oil and gas exploration and production names. We hit the 300% extension at 157.08 perfectly at the close of day on Friday. We closed at the highs. That suggests to me we should see some strength earlier in the week. Let's see if we can hold over 157.08, and I would target 174.72 in the coming weeks. So that's it. That is my market sector overview. Let me know what you thought about this video. Again, if you feel like what I'm saying jives with what you like, then feel free. Subscribe to my YouTube channel. Would love to have you. I put out these chart review for sectors every week. I usually do a top tech sector chart review as well. I'll be doing that video shortly after that, so keep an eye out on that. The other video I do is for my private community. The link for that is down below. I go over 10 to 15 names that I feel are going to be very actionable this week. I would say 75% of the time they trigger within the first day or two. I also put out trade alerts every single day, usually 1 to 2, through email every morning. I give you a sector update. I give you, any economic calendar events that are happening for that day. Whatever earnings are going to be happening for that day, any big news events that you need to know, and then I just continually keep you up to date with my trade alerts as they go along. So yeah, would love to have you. It's not that expensive. It's less than $1 a day. Totally get your value out of it. And then you get access to all of my premium content, which is in my university. So thanks again for watching this video. I hope you've enjoyed it, and I hope to see you back on the next one. Take care and good luck in the markets this week.